The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 31st. That's the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, how about we have an extraordinary one? Yep, let's have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next hour, I'm here to serve you. So feel free to pick up that phone. Phone lines are open, 877-927-6648. And if you can't call in, well, we've got you covered. Let those fingers do the walking. Send a quick email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, our Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Fed Wednesday. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up. Some markets are basically flat, which is what you would anticipate going into a Fed announcement. Dow's up 7, S&P's up 2, NDX is up 16 points. The Russell 2000 is making the biggest move to the upside, 0.6%, or about 10 points. The semiconductor is making the biggest move to the downside, off 1.5%, down 24 buckaroonies. Otherwise, everything else is relatively flat. Gold is relatively flat. It's off $4. Silver's down 1 full percentage point. That's 16 cents to the downside. Light sweet crude is up 43 cents. Leading the charge dollar-wise to the upside. Paycom software up 7%, nearly $17. MicroStrategy up $15, $12. Humana up $5. That's $14 to the downside. 2U Inc. Well, really, it's the velocity shares for the for natural gas. The bear position, the bear position. You've got 2U Inc. TWOU. 2 Utes. It's off $21 or 60%. Yikes! That's a nasty fall. MGP Ingredients down. Apparently, they have the poor ingredients today, down 28% or $18. Grand Canyon, a gaping hole, down 13.5%, about $17. So there's movers and there's shakers out here. Speaking of movers and shakers, our first question coming in from Brent in Martinez, California. Brent wanted me to retake a look at natural gas. So let's do that. And this morning, I went ahead and sent out an update to subscribers to make them aware of what was really going on inside of natural gas. And so I'm just simply going to begin with that chart. That way, it's an update out here. Brent can see exactly what's going on. He can pull up the chart from that update. And what we can see here is yesterday what natural gas was doing. So we're just taking a look at a 30-minute time frame chart. We're taking a look at breakout and breakdown levels, just simply to help us identify whether there's a change in trend, or at least a short-term change in trend out here. And what we noticed yesterday, which was nice, I didn't notice it till this morning, early this morning, was that yesterday it formed that little TD setup 9 count. It did that into about 7 o'clock in the morning. It was bar 8. Remember, a top or bottom can form on bars 8, 9, or the bar following 9. So it's either going to be a change in trend, a sideways move, or a little bit of a hiccup. I know you could say, well, shoot, you could say that about anything. Well, what we can't say about anything is how often bars 8, 9, or 10 do identify that change in trend. What, in fact, did natural gas do then? Well, on a 30-minute basis, it pulled back to its breakout area. That was at $2.12. You'll see the red line going across my screen. That was tested really 3 different times. The final test came in at about noon. Of course, I was on the road then. You were listening to Larry's show out there. So you had a test of support that had held out here. Now, the real key with regard to the short-term change in trend, that took place at 7:30 this morning. At 7:30, now that was after a bottom form, but the little TD set up a 9-count bottom out here, by the way. That was at 6:30 this morning. But the real key was being able to break through resistance out here, and that was at $2.14. Now, what has transpired thus far is price just simply caroused higher. And where did price stop when we take a look at this 30-minute time frame chart? The bar following bar 9 so far has been the high of the session. So the question is this just a sideways move? Is price going to pull back? Is price going to pull back and form a 9-count to the downside? That would be ideal. We don't even have that started as of yet. If price were to really come to the downside, well, Brent, it could come all the way back to the breakout level of $2.12. I am not projecting that to be the case, but it is not an unfeasible outcome. We really need to see how this, but what we don't want to do is just really stop with the 60-minute time frame chart. Now, what we did this morning, because when I sent the update out, it was about 9 o'clock, so price was right around here at about $2.18. And what we did was we said, or what I said was, hey, let's go check in on natural gas, and let's take a look at our TAS market profiles. And what was taking place at that time was there was a new market. Now, this is using Steve's advanced Doppler system out here. And that means that the profile may not hold throughout the day. But we can see that the bar color is changing. That's a daily time frame chart we're looking at. This has both the daily and the weekly profiles on it. But my best forecast with where price was headed to was the use of Stevie's advanced Doppler system, the use of these profiles. And what we said was if price was able to close above $2.20, that was the center line of this bullish structured profile. Bullish in structure because the center line where there's buyers and sellers were lined up or closer in proximity to the bottom of the box where there's only buyers. That's at $2.18. And so typically what happens, not all the time, but typically what happens when you break above that, it opens up. It's like driving down the highway. Right? Maybe driving down the highway right now. And if it's in traffic, as soon as that traffic opens up, what do you do to the accelerator? Yeah, you push down on it. And you push down on it until you get to that next detour point. Well, our next detour point or our next goal line, our next first down yardage markers are the bottom and top of our TAS market profiles. And so the projection there was $2.28. It didn't get all the way up to 2.285 to be exact. 2.268 is the high, really pretty darn close out here. So that's what you're going to be watching for. Well, one, we're going to be watching to see if this profile actually holds. We won't know if it holds until tomorrow. I won't know if it holds until tomorrow out there. It could reform, kind of like a storm out there. Or if price is able to close above, not what we can say, and just going to the longer term time frames out here, if price is able to close above $2.30, what you'll notice, or you should notice, is that is the center line of the bullish structured weekly profile. That's right, weekly profile. And if price at any point in time is able to close above that, so if it could close above 2.285, that would be the top of its daily profile. That would say resistance is taken out. You get above $2.30, that same accelerator move to the top of the weekly profile would be possible, 2.491. Let's wait to see if there is a retracement out here, because it may be a retracement worth buying. Right now, support for the 30-minute time frame would be the bottom of its profile, $2.21. And it's bullish in structure as well, and it just formed.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So John at the Tiger's Den added some additional comments here with regard to natural gas. Comments say the low Monday was a bear trap to a bottom. He was looking at we're looking at the September contract here for natural gas, large short covering, which he was looking for, which John was looking for, because of the commitment of traders report over the past couple of weeks out here. But John, here's the cool thing about just simply utilizing this tool, and I know you utilize Tom DeMark's sequential system out here, is these support and resistance lines, or these breakout and breakdown lines. To me, that's easier for us to understand. Here was the first instance during that time period where what you're looking for, price pulls back and tests these breakout support levels. And so there was really your first signal, your first confirmed signal of what it was you were anticipating and looking for yesterday. Not that you had to take the trade then necessarily, because what you're also looking for is a real break of resistance. And that's really the key out here. So it depends on the style trader you are. If you're aggressive, you're looking to buy that pullback. You don't always have to use a Fibonacci number. You want to understand price pulling back into a breakout area. And then what you want to see is resistance fail. Now, this is the exact same pattern that gave us the low signal on December 26th, the day after Christmas, when we came back early in the morning at about 3 o'clock. It was this exact same pattern, but it was on the ES Mini, was on the NQ that was saying, okay, things have overdone. There's going to be a short covering rally, or even further than that. And that's really the next question. So we were looking at the weekly time frame chart out here, and I just wanted to finish this off because there are folks that are in the trade. So what is it that, we took a look at the daily profiles out there. I could show you all the other intraday time frame charts, but I don't think those are as important right now as really taking a look at some additional confirmation, John, that this may be more than just a short covering rally or will extend itself. Is if we take a look at where price is trading to right now on the natural gas contract, we can see that it's hit its resistance level on its weekly base. Remember, we're taking a look at the weekly profile also that is out there, but we've got Stevie's red line, which, by the way, the exact price on that right now, let me get my cursor out here. The exact price is 2.262. And so if price can close above that, you can see that with the exception of 2 trading weeks out here, which was the week of July 5th and the week of July 12th out there, we haven't seen it close above Stevie's green line, which is red right now, really for quite some time. So that would be another positive out here. If this is more than just a knee-jerk reaction, you should see price trade above and close above the price point of 2.262. That would be what I would be looking at, whether you're inside natural gas or the equities or equities associated with that. So hopefully that, Brent, hopefully that helps you out and everybody else that might be taking a look at natural gas out there. Now, let's go to our next question that came in here. Great tools that go along with great insight. And again, you taking a look at the commitment of traders data to know that you should be anticipating and looking for something. You just kind of put the two things together. So Nick writes in, Nick says, hey, Steve, what do you think is going to happen in the market if the Fed cuts interest rates, and what is going to happen if the Fed doesn't cut interest rates? So it's a great question. And you'll see, Nick, that I don't have the crystal ball here. Even though I was in the crystal business, I searched every piece of crystal to see if I could find that crystal ball. But here's what I know. I can simplify this for you. And I can simplify it for you. You don't have to what you don't have to worry about, if you're in the market, you don't make any changes to what it is that you are doing at this stage. You don't try to front run this at this point, because what you can do is just simply wait for the signals. Now you might say, wait for the signals. What in the heck are you talking about? First, let's just understand where the markets are as we speak right now. And when I say where the markets are, you and I don't, there is no software that I'm aware of that allows me to hover over a candle and tell you what the Fed was or wasn't doing that day, what the news may or may have been, what it was the day before, the day after. There's just nothing. All I can do is look at chart patterns. That's not all that I can do. But in essence, to me, this is it. This is our art. This is our artwork out here that allows us to anticipate what the market is doing. And so when I say that, if we just take a look and answer the question, so where are we at in the markets? Well, if we take a look at the monthly time frame charts for the Dow, that's in the left-hand panel. What is the Dow doing? The Dow is sitting right at resistance. What is resistance? Resistance is the rising trend line from the highs in 2018, both back in January and then again in September or October in the Dow of 2018. Price is right at that resistance line. Will resistance hold? I don't know. It's certainly not the breakout that most financial media analysts are saying are going on, because all they're looking at is just simply trading a new all-time high or taking out a prior swing point out there. You need to do much more work than that, especially when it's sitting right in front of us. If you take a look at the S&P 500, what is it doing? The exact same thing. There is no real breakout that has occurred. The NDX 100 right now squeaking just slightly above that trend line that it has. And the Russell 2000, as well as it performed yesterday and even today, what is it not doing? It's not above, it's not closing above, not yet, 1602, which is resistance that has been in place since February of this year out here. So what is it that you and I can conclude right now? Would you ever suggest to your children or grandchildren or friends or loved ones or yourself that what you want to do is buy into something at resistance? Really? No, of course you wouldn't. Now, if there's a breakout, price pulls back and tests that, different story. But right now, what we know is price is at resistance. I don't know whether it's going to break out. I don't believe it's going to break out, but my belief doesn't matter. Here's the cool thing about where we're really at right now. How do we put all this together? We put it together by truly understanding where we're at. So where are we? Well, right now I'm at home in Delray Beach, but here's where the market is really at. We're also at this precipice, while we're up at resistance, of the unfavorable seasonal cycle. Will this cycle kick in? This cycle tops the summer blues, the summertime blues. The summertime blues out there typically takes place at the end of July. On average, it's been July 21st. Does it really matter to you or me whether it's July 21st or July 31st? The answer is no, it doesn't. And that's why you don't have to do anything. Because if this cycle's going to take hold, if the markets are just up at resistance, when you're up at resistance, you don't bust through them. What do? You bust them to the downside. Yes, that opens up the June 3rd low, or even worse out there. And this unfavorable seasonal cycle lasts for a while. It lasts for the month of July. It lasts for the month of August. It lasts for the month of September. It doesn't get done until all the leaves are falling off the tree. Of course, they're still not falling off the tree. Yes, they're in the middle of October, but that's how long this can last. So you don't have to do anything. All we have to do is just wait to see what the market's reaction is. Maybe it's going to be by 4 o'clock today. Maybe it's going to be tomorrow, but I don't need to have a crystal ball. This is our crystal ball. Markets are at resistance. Let's see if the unfavorable seasonal cycle kicks in. If charts are telling us ahead of time how they're going to react, the answer is that is going to kick in. But you don't have to front run it. Let's let buyers and sellers tell us with certainty. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back folks. So the next question coming in the Tiger's Den from John wants to take a look at different support levels for the gold contract. So, John, some of those levels here. Here we've got the 1 hour, the 2 hour, the 5 hour, and the daily and the weekly set of profiles for you. So what we can see here, here we're just looking for support or resistance. And if we simply take a look at the daily profile, we can see the price is trading above the top of its box, 1430, 710. Folks, make sure you can look at the December contract out here. So price is trading above resistance. The next resistance level for it would be the top of its weekly profile. That'd be 1453. To the downside, support would be anywhere between 1412 and 1420. That's on the daily basis, and 1386 and 1403 on a weekly time frame. You can take a look at the 5 hour time frame chart out here. You've got support at 1433. You bust through that, which, by the way, that's a bullish structured box. You bust through that, says you want lower price out here. Price is trading below the 2 hour bottom of its market profile and below the 60-minute bottom of its profile as well. As far as other areas, and I've maintained this, and I've maintained this just simply with regard to chart patterns that are out there. And I just caution everybody against this being one huge bull trap inside of gold. A bull trap from the folks that have gotten in late on the game out here. The reason why I suggest that is because of its monthly chart, its weekly chart, and its daily chart. And the reason, and maybe it does not come to fruition. If it does come to fruition, I want everybody to be protected, making sure you're using stops. Stops are very easy. You just have to figure out what the last 10 days average true range is. That's just daily movement. Multiply that times a Fibonacci number like 1.272 or 1.6 and have your stop underneath that. That's all that you have to do out there. Let the market do its thing. You don't have to guess. If we take a look, if the market is generating an advanced warning for us, does the market know is really the question with regard to how it's going to respond to whatever the Fed does. I don't know the answer to that. Usually it does. Well, if it does, then all we have to do is look at the weekly time frame chart for gold. What do we know about it? It completed an A to B equals C to the upside. What do you mean, Steve-O completed it? Well, its price projection was in the 1450 level. We don't use these as it has to hit it right to the tick, so to speak. We use this as a general measurement tool for where price is headed to. On the trading session of June 28th out there, not only did it hit that area, but it then, by the end of the week, created a shooting star, a bearish shooting star. When price is moving higher and it's completing the A to B equals CD pattern, the only way I've been able to find to determine when buyers and sellers, in this case here, sellers tell you there's a top, is they generate a bearish reversal candle. It had follow through on the next week. We did see a higher high out there. Well, that was 2 weeks ago. And when it did that, what bar was it? It was bar number 8 in the TD setup 9 count. Look, when gold made its bottom, its major bottom back in 2018, in August of 2018, it was with that same TD 9 count out there. We just looked at it on short-term time frames. We pay attention to that. Last week was bar number 9. So now we know that we have 2 patterns out here on a weekly basis that say that there's some kind of top in place for gold. Will price just pull back to 1403, which would be no big deal? That's just Stevie's green line. That's a possibility out there. What happens if gold spikes higher today and tomorrow? Well, all it then does is get to wave number 7. That would be letter G. And it's the bar following bar 9. And we know that a top, if there's going to be a top, and we use a TD setup 9 count, that can occur on bars 8, 9, or the bar following bar 9. So regardless of what gold does today or tomorrow, it's really going to be next week that's going to assist us. But right now, gold on a weekly basis, 2 very valid topping patterns, enough to make sure that those folks that don't use stops, use them. And look, if that's not enough, all you have to do is take a look at the daily time frame. The daily time frame, what has it done? It's made wave number 7. That's how it's made its most recent high. It did that when it made its most recent low back in May. Can the same pattern repeat? Well, time is going to tell. Price continues to now find resistance at Stevie's green line at 1448. That is sending a message to us. And you had a Rhodes momentum indicator top in gold. Again, I have no idea how gold is going to behave. But what you and I can do is just simply look at the charts and the chart patterns out there and say, well, maybe buyers and sellers know something out here. So there, John, are your levels of support or resistance out here. And let me see. The next question is, Ray Sarasota is going to write you an email. That's okay. I'll look for his email. So that's what I've got when I take a look at gold. What are the bullish elements of gold so far on the chart patterns out here? It would be the 2-hour time frame chart that has held up the best for gold. Now, we did talk about how it's below its profile out there when we looked at the market profile charts. Here, though, is what gold did earlier today as price was pushing lower. And John was bringing this to everybody in the den's attention. What price did on the 2-hour time frame chart, John, is it pushed down to support, and that was at 1434.90. So if we just kind of flip this around with regard to natural gas out there, I would say if price closes below 1434.90 on a 2-hour time frame, where price is headed back to is its prior breakout level, which would be 1405. So the 2-hour time frame has held up the best so far for Goldilocks. So I hope that helps you out with regard to support levels for gold. Mike writes in a question: natural gas. He says, is your oscillator on change line at 223 roughly? No, it was really, when I gave you that figure out there, it was right to the dollar. Hold on, let me. I'm sorry, I lost his email. Let me pull that up. So Mike's question was your OUL the rough? No, it was exactly at that. If so, could that be support? It's resistance right now. So let me come back and pull that out. Make sure that we clear this up. If you've got a question, I want to be able to answer it. So what we were looking at out there, Mike, or I believe that's the only oscillator and change line that I looked at, was the weekly with regard to natural gas, and that is resistance out there. So maybe you meant to write resistance. I know you're typing or what have you, but that's resistance. Here's the weekly time frame chart. You can see, and the way that this works now, when it's red, what it tells us is the price oscillator. The price oscillator is a difference. Any oscillator is a difference between two things out there. We use moving averages for that. I use 19 and 39 for very specific reasons out here. That's what is used to create that. The oscillator and change line, it is not a moving average. And so the cool thing about that is this is a real, what we'll call long-short indicator to us. You would anticipate in bear markets that your counter trend rallies are going to run into resistance at that level. Now that's the cool thing, because I've got it on the daily and the weekly time frame. Price was moving towards resistance in the daily, the top of that daily profile that looks like it's forming today, and also running right into the resistance of that weekly oscillator and change line, combined with on the 30-minute basis, creating that TD setup 9 count. Now, if you're long, it's not saying to be short. It says you've got to be careful, right? Because counter trend rally could be over. Ideally, what takes place is we see some type of pattern form to the downside on a 30-minute basis specifically, and it forms the TD setup 9 count, maybe in bar number 2 right now, and it does that above the price of 214. That would be the retracement that you're looking for, and then the potential entry point. Resistance still has to fail, but right now it's a pretty nice move out there. So let's see what happens should price pull back on a 30-minute basis. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Ray in Sarasota writes in. He says, I'm currently long Yamana Gold. That's ticker symbol AUY. Those are the 3 charts you're looking at on our screen right now. He says, can you please give me your point of view? Well, I won't give you my point of view, but we'll take a look at the chart's point of view as to where price for this stock is heading for the short term, 1 to 3 months. So Ray, let's just begin by taking a look at our daily, our weekly, and our monthly set of profiles out here. And price is above the top of the daily profile, so it's cleared resistance out here. Remember, these are not going to spot tops or bottoms. This just helps us to understand is price above resistance, below support, in between, and that provides us with our support and resistance levels. Well, price is also above the weekly, so that's a beautiful thing. It's above a prior swing point, albeit with really kind of shaky volume at this stage. It did have volume back on January 28th. The week there was 71 million shares. Last week was 81 million shares, but this week volume has fallen off. It's Wednesday, you're at 47. Maybe if you double it, it's okay. But in any event, so with regard to where price might target, and you have here 1 to 3 months, well, what we could say here from a profile standpoint is a price target now would become the top of the quarterly box. That's what it's trading within. It's been trading within that range, which is $1.84 to $3.69. There's your real consolidation area. Those are the red solid lines on my chart out here. So that would really become your price target. Now what we have to do is take a look at Stevie's other tools out here that help us to identify tops and bottoms and what you should look for. By the way, the average daily movement on this stock is 12 cents. Shoot, if we multiply that just by 1.618, that would say you should have a trailing stop around 280, 282, 283, 284, and somewhere right around there. Just in looking at the math, you can calculate that on your own. Of course, that 284 is still above the top of its daily profile, which is 270, which could be a support level. But again, this doesn't give us any advanced warnings of what to be looking for. Let's look at the daily time frame chart. What do we know about the daily time frame chart? Well, number one, we know that yesterday was the bar following bar 9 of a TD setup 9 count. Could be, doesn't guarantee, but could be. This would be where a top could form inside of Yamana on a daily basis. It says be careful. It suggests understanding where support or resistance is, perhaps using stops. Stevie's green line is at 296. You close below that. We haven't seen a close below that since Yamana made the low way back in June. So a close below that today, 296, would be sending a fairly important signal to you. Now, today is just an inside bar. I don't know whether you get a bearish reversal signal, but if you did get one at the end of the day, price is also moving higher, doing less relative energy, creating that Rhodes momentum indicator at this stage. It's not a confirmed pattern. If you get a bearish reversal candle today, what I would prepare you for, Ray, is expect this to pull back. Now, where could this pull back to? I don't know where you're in at, but 260 is where it most recently broke out. 260 because of that TD setup 9 count. So that's what the daily time frame chart shows. It says right now you've got to be careful. Not different than what we took a look at when we looked at the daily and the weekly chart, quite frankly, for gold. Well, let's look at the weekly chart for Yamana. What is it doing right now? Well, it happens to be in bar 9 of a TD setup 9 count. Is that important to you, Ray? Well, let's just answer it like this. When it bottomed on a weekly basis, what was the pattern it bottomed with? A TD setup 9 count on bar number 9. It says just simply be cautious. Just simply be cautious. I don't have a confirmed sell signal, so to speak. What I have is be very cautious out here. And don't just let it run for the sake of running. If you've got nice profits out there, just simply make sure that you use some type of stop. Whether it's mental, whether it's a physical stop, if it's a mental stop out there, watch for those levels and then go ahead and take action. So, Ray, I hope that helps you out with regard to what the charts are communicating to you and I for Yamana Gold. No other questions. Phone lines are open, 877-927-6648. Of course, in the Tiger's Den, your pings are open as well. So, again, flat market, not really much to act upon. Not much to act upon at all. Apple, kind of an interesting chart, as long as we have it up on my screen, which we do. And so today's candle is always one of those confusing candles because it's both a bullish candle at this stage and a bearish candle. If you take a look at it, you've got a shooting star candle. Shooting star, the opposite of the hammer. You've got very little wick on the bottom of the candle out here, as we do right now. Your body is, or your wick, I should say, is more than twice the size of the body out there. It can mean, it can be just in the way that shooting stars, my experience with shooting stars is they either work or they don't, unlike hammer candles. What I mean by that is if today's close is a shooting star, and I don't know whether it will be or it won't, let's assume that the close was right now for the market. If there was follow through to the downside, that would say it's working. A gap, in this case here to the upside, a rising window, is a bullish candle. So there's your bullish candle and your bearish candle out there. So what do we know about Apple from a daily perspective? Here's what we know about Apple right now. Today looks like it's going to be bar number 8. Yesterday was 7. Today should be bar number 8. We know that instruments can make tops or bottoms on bar numbers 8, 9, or the bar following. When did Apple make a bottom and what was it with? Well, back on June 3rd, it was the bar following bar number 9. So this says, hey, beautiful earnings or revenues, or we don't really care about that. We just want to understand what buyers and sellers are doing. We want to understand the race, so to speak, out here. I'm not saying to go short Apple. I'm saying be paying attention to Apple and the daily signal out there. Somebody, I don't have the volume on this chart, but somebody might be just dancing and they might just be euphoric about what Apple is doing and say this is headed towards its all-time highs in the 230 area. I would say the chart patterns say not so fast. If we were in bar number 3 or something, that would be a different story. I'm not going to tell you a different story. I'm going to tell you the story that the charts are telling you and I. All I am is the narrator. I don't change my pitch whatsoever. Maybe, deeper, higher pitch or something, but not pitch to you. Now, on the weekly time frame chart, this is where things get a little dangerous. Dangerous? What do you mean, Jelly Bean? Here's what I mean. You can see that we are now in week number 8 of a TD setup 9 count inside of Apple. And today's move, prices moving higher, doing it with less relative energy. Now, on a weekly time frame chart, when you take a look at that pattern, okay, this is the Rhodes momentum indicator top. When you take a look at that pattern and your eyes start to drift left, And you see when Apple made its all-time high, what was it doing? Same pattern. Same pattern. It says be careful. Now, this is likely to be week number 8. I won't know if next week, and you have to have the full 9 count out there. That means you wouldn't know about this pattern, whether it's a completion or not, until next week. And as long as price closes above this week, next week, well, certainly this week, but let's assume that it does this week too, but price must close above 203.30 next week to confirm that pattern. When the TD setup 9 count happens below a prior breakdown level, which is 224.23, that is usually bad news. Remember, the natural gas contract, we're hoping for a TD setup 9 count to occur above the prior breakout area. That would be a buy signal. This could be a sell signal. Maybe Apple knows what's going on with the markets. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Tom O'Brien published the 900th issue of his weekly newsletter, The Gold Report, on July 22nd. It's amazing he started the Gold Report more than 17 years ago when gold was trading at only $252. To celebrate, we're having a special Tiger Dollar sale. Right now, you can spend only $495 and we'll give you 200 extra Tiger Dollars. So you'll end up with 695 Tiger Dollars, which is the yearly price of the Gold Report. Tiger Dollars can be used for any TFNN newsletter or service, and this offer is open to new and current subscribers. With gold making 6-year highs and gold mining equities trading higher, this is a great time to sign up for the Gold Report at a dramatic savings. For all the details, visit the front page of TFNN.com. This deal ends July 31st, so don't miss out. Get your Tiger Dollars and sign up today for the Gold Report 900th issue sale.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, Mike, thanks for writing back in. The oscillator and change line level he was looking for was the daily, and the daily right now is priced at 220. And it's short-term positive, bullish, that price is above that, or can say more counter trend rally. But Mike, what you got to do, what I like to do is say, okay, this is what's going on in the daily time frame chart, then what's going on the next level above, or what is still going on in the daily time frame chart. And again, I don't have my TAS market profiles in the white background chart because I don't have the advanced Doppler system for the Ninja Trader system out here. But I do have that advanced Doppler system on my e-signal application. And so, Mike, that tells you that that just because we're above that doesn't mean that, A, you're off to the races, everything is cool, because price needs to close above 2.285, which is the top of that daily box, which could reform itself. This may not be a solid profile out there because I'm trying to use this advanced system just to provide you and I. Now, it's not that it's wrong out here, but it's generating new profile levels, which is really important. And so you and I are able, I didn't mean to do that, but you and I are able to really fall back on the weekly oscillator and change line, which is really the most important level for you to be watching out there. So we've got just about 5 minutes, 4.5 minutes before the Fed announces, and I think I'm not sure exactly when Powell comes out, if it's 2:15, 2:30. Then we have to watch to see how the markets trade during that time frame. And what should you be watching today? I'd go with one thing and one thing only, Vasily. Let me see, can I find it? Here we go. It's really this. If the spot VIX index closes today above 1424, right now it's priced at 1395, then what I believe we have is the confirmation of the summertime blues. And if it doesn't, the market continue to move higher, move sideways, but not necessarily move lower. So let's watch that come 4 p.m. Thanks so much for being here, folks. Stay tuned. A great lineup is ahead of you. David White, your favorite polar bear. Tom O'Brien, 3 to 5. I'll be back with you tomorrow at the normal time, 1 p.m. Have a wonderful Wednesday.